He emphasized the historical context, mentioning how societies have mismanaged currency, often leading to dire consequences. When you print more money than you have commodities, the value erodes, which is exactly what we're witnessing, he asserted passionately, provoking murmurs of agreement among attendees. He glanced at the numbers on the screen behind him, growing US debt figures, before continuing, "This is not just about Bitcoin, it's about our future economy." Many people are beginning to ask, what happens when the world loses faith in traditional currencies? Armstrong pressed on, his gaze scanning the audience as he felt the weight of each word. "If we do not take decisive action, I believe Bitcoin could emerge as a more stable alternative, especially given the uncertainty surrounding other fiat currencies." He paused, letting the implications of his statement settle in. "It's crucial that we consider the long-term effects of this trajectory. The shift we're witnessing may not merely be a trend, it could be the beginning of a financial revolution." History teaches us that once a currency is untethered from tangible commodities, the result is often rampant devaluation, Armstrong continued, leaning into his points with growing intensity. "We've seen this play out time and again. It's like a cycle that keeps repeating itself, each time with more severe consequences." He took a breath, allowing the audience to absorb his message, then added, "To avoid this fate, we have to recognize the potential of Bitcoin as a hedge against government failures." As he spoke, nods of agreement appeared throughout the crowd, reflecting the anxious optimism that permeated the room. Armstrong then moved on to address the current economic climate, highlighting the various factors feeding into the bullish projections for cryptocurrencies, emphasizing how the mix of institutional investments and changing consumer perceptions could redefine finance as we know it. With corporations like GameStop and organizations like Trump Media entering the crypto space, it's a clear signal that the landscape is evolving, he pointed out, underscoring the growing acceptance of Bitcoin not merely as a speculative asset but as a viable financial instrument. In fact, he continued, adjusting his stance to engage more with the audience, the larger economic shifts we're witnessing are not isolated events, they're interconnected. A murmur of intrigue rippled through the crowd as he mentioned the significance of recent movements in the crypto market. "The interest from big players isn't just a passing trend, it's a clear indicator of the sector's maturation and potential," he asserted firmly. "Companies are no longer merely speculating, they are diversifying, ensuring that they remain resilient to economic fluctuations and policy changes. This creates a solid foundation for Bitcoin to thrive." Armstrong's words resonated deeply, illustrating that the rise of cryptocurrency could herald a significant shift in financial strategy moving forward. Moreover, Armstrong continued, eager to explore the nuances of inflation. "The ramifications of government debt extend beyond just numbers, they affect everyone, from everyday consumers to large corporations." He gestured emphatically, letting the audience visualize the ripple effects. "As debt mounts, so does the question, how much longer can our system stabilize before it falters?" A palpable tension filled the air as attendees exchanged thoughtful glances, realizing the urgent need for vigilance in the face of potential economic upheaval. In conclusion, Brian Armstrong's vision underscores the critical intersection of government financial policies and the future of cryptocurrency. As the economic landscape continues to evolve, adapting to these changes could determine not just the fate of Bitcoin, but the stability of the global financial system itself. The need for awareness and action has never been clearer. Coinbase CEO Brian Armstrong, ballooning government debt may make Bitcoin the world's reserve currency. More government debt, more potential opportunities for the crypto bulls. One thing that is clear is that democracies around the world are having trouble getting deficit spending under control, Coinbase, CEO Brian Armstrong said at the Coinbase annual summit in New York City on Thursday. "If you study history, once you decouple currency from hard commodities, the inevitable story is they get overprinted and extended, right?" Armstrong said it's not a coincidence that Bitcoin, BTC/USD, prices are hitting records as US debt reaches all-time highs. "I want the US to remain the reserve currency status," he added. "But if the debt situation doesn't get fixed, I do think that eventually Bitcoin will have to become the reserve currency for better or worse. It's not going to be the Chinese RMB because I think they have their own debt problems." Armstrong joins Tesla, CEO Elon Musk in warning about the ramifications of rising government debt. Musk is fresh off a dust-up with President Trump on the matter, slamming the debt projected to emanate from the administration's signature, big, beautiful, tax bill. The crypto industry has seen a host of catalysts this year that have fed the bull narrative. The Trump administration has moved to create a Bitcoin strategic reserve, though its framework remains to be determined. Companies such as GameStop, GME, and Strategy, MSTR, have been big buyers of Bitcoin to diversify their cash holdings. Trump Media and Technology, DJT, recently announced a plan to raise $2.5 billion to buy Bitcoin. Stablecoin legislation is navigating its way through the government. And Circle's CRCL IPO was met with resounding enthusiasm. Morningstar data on 294 crypto funds revealed they hauled in more than $7 billion in net inflows in May, the highest since December. Bitcoin funds attracted net $5.5 billion and Ether funds a net $890 million in May. Despite the positive news, Coinbase shares are only up 3% year to date, relatively in line with the S&P 500, GSPC. The company's first quarter sales fell 24% from the prior year amid a slowdown in trading activity. Analysts went on to warn of a more challenging transaction environment for the balance of the year. We still struggle to identify the next cryptocurrency catalyst that deeply engages retail and thus powers Coinbase earnings, JP Morgan analyst Ken Worthington wrote in a note.